Hey, thanks for joining me on Sunday, the 23rd of October. Okay, last week was a tough week. There was a lot of sideways action and I did find it confusing, but I think we've got some clarity now. Okay, so this is gold. We're going to look at gold, silver and oil in this video today. Right, this is the monthly chart of gold. I want to address this potential cup and handle pattern. It's been talked about on social media. I don't see it as such. I think that would have been a clear handle if that were not turned into a double top and the market then drove down below the low of the handle. If I'm wrong, if you know the cup and handle pattern better than I do, then please let me know. If you still think this is a valid cup and handle, I would like you to tell me where I'm going wrong, but I don't see it. So I did see the double top pattern and the market did drive lower, but this is failing. The double top is failing, and I'm surprised because it's a big pattern. But the break below the neckline at around sort of 1680, 1675 and the 200-week moving average should have been a big sell signal to me. I was surprised to see the market push back up through. All right, sometimes you get a fake and then the market goes down and we continue in the direction that we should continue. Well, you know, the break of the neckline of the double top should be the sell signal. The week before, we had the big red candle. So I thought, okay, here we go. We're going to go down. We're going to break the previous low and we're going to finally see this double top pattern play out. But this is getting so confusing. We made a low at the just above the previous low, 1613 and change. This week's low is 1617, bang on. A moderately bullish candle on the weekly chart with the green body and the long lower wick. Not massively, but similar to the one that we had 2 weeks ago, which of course led to a big gain the following week. Are we going to see that this week? Well, yeah, we could. Now look, I don't see that this 16 sort of 17, 16, 13 area as a support level. I don't understand why we bottomed out there. If you do, comment in the box, please. I need to know, but I can't see it. Now, what I can see is a bottom here with a bullish engulfing candle triggered in the last week of September. Now, this led to, as I say, 2 or 3 days of gains, and then the market tumbled back, wiped out all those gains. A really confusing period, you know, some really big green candles looking very strong. But as soon as we hit the 1720, 1725 area, which you will remember I did have resistance and we were selling it up there, the market turned back. I thought maybe we would hold this support level. I thought we would then maybe build an inverse head and shoulders pattern. That was not to be. We broke back down through 1680 and then just continued lower. You can see that resistance level then held that mid 1680 area, which I'm sure you remember. I went on and on about it so much. It still is important. It's clear just from the swing low here, the swing high here, the swing low here. Look, the mid 1680 area remains important, but we've now got a second bullish engulfing candle on the retest of the September low. Will we see the same reaction over the next 2 or 3 days this week? We could do, as I've said. This indicates to me that we have a double bottom pattern in gold. The market's not severely oversold, but was oversold enough, and the stochastics are turning more positive. Let's just have a quick look at the oversold situation in the weekly chart. Okay, still oversold, not severely, but anyway, and I suppose longer term we are in a bull trend anyway. So look, it looks like we've got a double bottom from an area which was not a support level, but the fact is we've got the double bottom. The buyers are in. So whether it's a fundamental trigger or whatever it is, doesn't seem to be a technical trigger. We now got resistance at sort of 1658, 1660. Well, I had that on the report, I think, on Friday, and I did because you can see why it is a resistance level. We've got the trend line and the Fibonacci level. It's relatively weak. We have got some price action here backing it up. And here, of course. Anyway, if we get through 1660, who knows, we may even gap open above there when the market's open tonight on Sunday. If we gap open above 1660, I would take that as an immediate buy signal. And I would see then, well, you've got the levels on the report, but obviously we could be heading up to the mid 1680 area. Anyway, what will change that? Well, we have to break below 1610. So if we do start trickling back this week, break below 1610, then that would be a sell signal in gold. But right now, it looks positive. Just remember, break above 1660 can take us up another 25 points. Now, this will be an important area for obvious reasons. You can see from the trend line that goes back to April. You can see from the Fibonacci levels that I've got on here already, and the price action, swing highs, swing lows, and We've also got the black 50-day moving average hurtling down towards that area. So this, I'm just going to call it 1680, 1690. That whole area is going to be the key resistance level. Now, it held here, and obviously it held on the downside in the summer of 2022, and it held on the downside throughout the whole of 2021. So it remains an important level. We will need to see gold up above sort of $16.95, $1,700 for a more convincing buy signal. We'll address that during the week. Silver is a more confusing picture because we're just going sideways, and you know that I really don't like sideways directions. Yeah, finding this tough. Look, we've really only just gone sideways in this range since July. So, you know, summer into autumn, it's just a big sideways trend. What can I do? I have picked some good levels that have worked in silver, but it's tough. What would I say now? If you force me to trade silver, well, we've got a big candle here, not a bullish engulfing candle like we have in gold, but we have a big candle off the lower trend line support. This is the range that I've got at the moment. We've broken above the trend line that goes back to June, so that's a mildly positive signal. We closed at the high of the week, we closed at the high of the day, so that looks good. Looks like we're going to test 1917, 1980. That's the key resistance level for me. A break above 1995 should be the next buy signal, and then we can push up to sort of 2110, 2120, I would imagine. Those are the levels. I'm going to have to let you crack on with it, but certainly we need a hold above sort of 1925, 1900. Yeah, if we can't do that, then it doesn't look so good for silver. Okay, WTI crude. This is a tough one. 100-week moving average did the job of support. We're bouncing back. Look, we're obviously in a bull trend. That goes without saying. We don't have a particular topping pattern, so this is probably a correction in a bull trend. What can I say? I'm really trying to think of some things to say which look, we can base something on it. It's not easy. I'm going to join some more trend lines up here. Look, we've broken above this trend line, so that's got to be positive. The thing is, we had a big green candle 2 weeks ago, 3 weeks ago, and then, you know, we've just completely reversed back down. So that is confusing. Right. 500-day moving average had a similar value to the 100-week moving average, so that acted as support. Oh God, what can I suggest here? I really don't know. We could be about to form a more positive trend, but it's really chopping backwards and forwards. Look, maybe this is it. Look, we've got a, whoops, yeah, that's not what I'm trying to do. We have got a higher low from last week. So there is some optimism there with these trend lines. I could argue that this is a rising channel, albeit not very aggressively, but you know, when markets turn, they don't turn that aggressively. Could I argue that this is an inverse head and shoulders, left shoulder, head, right shoulder? Yes, I could, but we're going to have to break above the neckline for that to be confirmed, and that's all the way up at around $95, where we meet the 100-day moving average. So we're way off that. You know, there's not really much to go on here, if I'm honest. The levels are on the sheet if you want to trade it, but direction-wise, you can see I'm a little bit confused at the moment, and I don't have any strong conviction. For the three commodities, I'm going to get on and film and do a video on dollar pairs, another one on yen pairs, and another one on the stock market, so keep an eye out for those. If you're watching this after I've released it, a day or two after I've released it for my subscribers, then please do like, share, and subscribe to my YouTube channel, and keep an eye out for the other videos that I've just mentioned.